In terms of where we go from here, is the market priced about right now in terms of the expectation for where the Fed goes, or are you bracing for more moves in positioning?
It's about the pricing, but it's also about, is the Fed behind or ahead of the curve? If we start to see the economic data weakening, then the Fed is going to be proven to be behind the curve. Whereas if we see stabilizing economic data and the Fed does continue to switch into this more dovish mode because it concludes in its policy review that it does need to cut rates more, that it already maybe over-tightened in the previous phase, then we have this sort of what many have called the melt-up scenario potentially. But I'm a bit between horses. I think what we see is risk appetite maxing out, especially if the trade negotiations are on the rocks, and then we see probably more Fed rate cuts than the market is pricing by the end of this year.
Yeah, and we're looking ahead to CPI data at the end of this week. I guess we'll find out there how much weight the transitory comment from Chairman Powell had as well. But with the dollar weakness on Friday following the jobs report, and then we get strength today, perhaps a bit of the safe haven bid, again, because of the trade headlines. So these opposing forces on the dollar. What's your outlook?
Outlook is I have a hard time really for the longer term selling the dollar until I know that we are sort of post whatever recession or financial mishap we're facing, which is the standard routine when you're seeing a U.S. recession. So in that perspective, I think the dollar has a rocky path here, but generally has maybe not peaked for the cycle, especially versus the riskier currencies, versus the commodity dollars, et cetera. And that process could take a bit longer than I originally anticipated. We may not see the dollar rolling over until 2020.
On the 10-year yield as well, not trading right now, UK markets closed, but futures indicating we could get to round about a 245 handle. Do you see the direction of travel as lower for yields from here, given all the risks out there and also the expectations around the Fed and the curve flattening we've already talked about? Well,
the long end of the curve, to me, is a safe haven indicator. So if the yields are going lower right here, I think it's all about trade negotiations, equity markets selling off, et cetera. I think a more profound lowering of the rates, even if we're not seeing that kind of news, would suggest the market is very, very pessimistic on the growth outlook. So, tactically right here, it's suddenly, we've seen a grenade, if you will, thrown into the room on the trade front. And further out, it's more about these other issues.